I am Eileen Doherty, and I'm the director of the Colorado Gerontological Society. And this is part of our Aging in Place series. And part of what we are attempting to do in this presentation today is to look specifically at the senior housing income tax credit, but also to fold into this presentation the additional opportunities, if you will, in which older adults may be able to take advantage of some additional opportunities next year in 2025 for rebates. So we're going to start with the senior housing income tax credit. So some of you may remember that we had the senior housing income tax credit in 2022. It was not funded in 2023 and now was funded again in 2024. So because it has to do with an income tax credit, it is actually claimed the year after it is passed by the Colorado legislature. So there was lots of legislative support for that this year. We are wanting to do a special shout out to both Republicans as well as Democrats who took leadership in this. So Representative Mike Weissman and Representative Bob Marshall were the leaders on the House side, and Senator Chris Kolker and Senator Chris Hansen were the leaders on the Senate side. So to be eligible for this, you have to be 65 and over on or before December 31 of 2024. And overall, to be eligible, your federally adjusted gross income has to be less than $75,000 if you're filing as a single person, or less than $125,000 if you are filing a joint return. Now, this senior housing income tax credit is only available to people who are not property owners who are also not claiming the senior property tax homestead exemption. So if you claim the senior homestead exemption, you will not be eligible for the senior housing income tax credit. The senior housing income tax credit is available to both property owners who don't claim the exemption as well as to renters. The amount of the credit will be $800 for individuals whose adjusted gross income is less than $25,000. And again, if you don't claim the homestead exemption. If your income is between $25,000 and $75,000, it will be reduced by $8 for every $5 of income. So for example, if your adjusted gross income is $50,000 and you're single, then you would get about $500, or you would get about half of it. Or you might get closer to $400. So this is just another way of saying the same thing, other than the fact that if you file a joint return, so my husband and I, if we were to claim it, if we filed for $25,000, then each of us would be entitled to $400. The last time we would have each been entitled to $800. They made a change on that this time. Again, if you're filing a joint return and your income is between 25 and 75, then you'll get about $500. Or again, for each of you, it will be about $250. So that was a major change from the 2022 tax credit. Now, if you owe Colorado income taxes, basically what will happen is that you will get a reduction in the amount of the income tax you get, because the credit will be subtracted from the income tax that you owe. So let's say you're a single person, you made $25,000 in, say, wages, and you were not claiming any Social Security or anything like that. And if you owed the state $1,000, then you would get the tax credit of $800, and then you would only owe the state $200. If you had the $1,000 deducted and it was already paid into the state of Colorado, say it was paid in through your wage deductions, or you paid estimated taxes, then you would get a refund of $200, because you would take the $1,000 minus the credit of $800, and they'll send you a check for $200. If you don't owe any income taxes, then they will send you a check for $800. So to claim this, though, which is one of the things that is always very difficult, we are, although we have advocated for a simplified way to file for this, if you don't owe any income tax, you will need to file for Colorado income tax. You will be what we call a non-filer. And you have been told for years, if you make under $25,000, Social Security is your only income, and maybe you get a little old age pension, you don't need to file for taxes. And that is absolutely 100% correct. However, if you wish to claim this senior housing income tax credit, you will need to file the Colorado DR 0104, and you have to file a second form, which is called the CR 0104. Again, both forms have to be filled out. We don't have information at this point in time on filing instructions. We hope to get that either in very late December or in the first week or two of January. So you can file for this. We were able to get this extended a little bit. So the filing time will be from January 1, 2025 until October 15th of 2025. Now, our office is suggesting that you wait until about January 15th to file, so that we can get, and you can get, all of the correct forms, and we can get the instructions down properly, and that we don't have any filing problems. What we ended up having to do sometimes in 2022 is we ended up having to file amended forms because we filed too early and not everything was available to us. So even though I know that everybody is anxious to get the money as soon as possible, we suggest that you not file initially the first week of January. If you are a partial year resident in Colorado, you can claim the credit based on a prorated amount given the number of months that you were a Colorado resident. That is usually determined by either a lease or the day that you bought a piece of property, or the day that you changed your driver's license. Those are all good ways to prove that you are a partial year resident. Now I'm going to talk a little bit from this point forward about a couple of other programs that are available as well and can put money either in your pocket or in the pocket of your family and friends. So the next thing we're going to talk about is the senior property tax exemption, or the homestead exemption. To qualify for that, you have to have lived in your house for 10 years or more. You have to live in that house as your primary resident. And then the way that it works is that you get a 50% discount on the taxes you owe based on the first $200,000 of value. So let's say you own a house, it's worth $300,000. Say your taxes are $2,000. So you would get a 50% discount on the first $200,000 or approximately $500 discount. And then you would pay the balance of $500 or some number close to that. To be eligible, there are several categories. In addition to be an older adult, you have to be 65 years of age and over. If you are a disabled veteran and a surviving spouse of a disabled veteran or a surviving spouse of someone 65 and over, you could qualify. If you're a Gold Star spouse, and recently in the most recent election, a couple of weeks ago, we now have included military veterans who are not able to be employed due to their disability. That will start in 2025 for taxes that are paid in 2026. The individual or individuals, husband and wife, or a single person must have their social security numbers, and they do have to provide that. That is how the state property tax examiner and the county assessors and the Department of Revenue all work together to make sure that you are eligible to receive the exemption and that there aren't any mistakes that are made. If you're a surviving spouse and you're under 65 and you and your husband were claiming the exemption prior to the husband's death, say for example, you can continue to claim it. Now, there are some exceptions to when you can live in your primary residence or still qualify. So, but most of the time, what they're really looking for is, do you live in that house? If you have transferred ownership to a trust or an LLC, you can still live in the house and claim the exemption. If for some reason or other, you or your spouse had to go into a nursing home and assisted living or a hospital, or both of you had to go, you could still claim the exemption. You can claim it if your property is condemned by a government agency. Say they're coming in and doing a bunch of property condemnation because they want to use your property to build a highway through your area. You could still claim it. Or the other way you can claim it is if your residence is destroyed by a natural disaster, such as like a fire or crushed because of snow or something like that. The credit then is provided on the property tax statement that you get. So the credit is basically subtracted from the total amount of property taxes due. What happens or what you get is you get your tax statement. It says you owe $3,000. You're getting a tax credit of $500. So the amount due is $2,500. And if you have a mortgage on your house, make sure that the mortgage company knows that you are eligible and have been approved for that tax credit. Most of the time, that information is forwarded by the state or the county treasurer or the property tax people to the mortgage company, but do a quick check and make sure that the mortgage company has in fact deducted it from the amount of taxes that they pay on your behalf. To apply for this, you can use the approved county form. You submit it to the county assessor. You only have to apply once. You don't have to keep applying every year, which is really good. And the date for filing varies by county. So check with your county assessor's office. Everything does need to be filed by July 15th of each month. Now, another thing that is new this year, or will be new, is that seniors and older adults have been asking for years and years and years whether or not this senior homestead exemption could be portable. And the reason for that is that if you claim the homestead exemption and then you move, you lose that 10 years of residency. So what the state legislature did is that they kind of met us halfway. And what they have approved now is that if you were eligible for the senior homestead exemption, after January 1 of 2020, then you can apply again. So they didn't go back all the way to 10 years. They only went back 4 or 5 years, but that will help a lot of people who have moved recently to be able to get reinstatement. You do need to apply again with the county assessor's office. Again, we do not have the information right at the moment about exactly what kind of proofs that you will have to provide. We'll know more about that in early January. You can apply by March the 15th is better, but you can file as late as July 15th. And then the exemptions are approved and determined in the fall of 2025. And then if you are approved for this portability thing, you will see it on your 2026 taxes. So even though you won't get the exemption or won't be eligible again until 2026, you have to take action in 2025 to be able to get the reduction in 2026. The next thing we want to talk about briefly is the PTC 104. And this is a tax rebate for individuals age 65 and over and disabled individuals. So again, as you can see, all of these different rebates and refunds and tax credits have different eligibility. They have different requirements. So you have to make sure that you apply for the right one. So the eligibility for the PTC 104 is age 65 and over. You're a surviving spouse, 58 and older, or you're disabled. You do have to be a Colorado resident and pay rent or property taxes. You have to have a social security number, and the income eligibility for this program has been going up steadily. So right now you can apply for the 2023 rebate if you make less than $18,000 per year as a single person, or $24,345 as a couple. The application for the 22 is due by December 31 of 2025. If you have not applied for a 22 PTC 104 and you're under that income limit, you can also apply until December 31 of 2024. If you apply, and most people who are this low income also get SNAP and Medicaid, the money that you get from this PTC 104, same as the senior housing income tax credit, are not counted as income. Sometimes we suggest that you not deposit the check in your bank account, and you actually have the state send you a check to your house, because then you can avoid any problems with redetermination for public benefits. If you keep the money that you get from these exemptions more than 30 days, the county sometimes will infer that that's a resource, and then they disallow your like food stamps or Medicaid. And technically it's against the law, but what we have to do is that we have to appeal it. So the PTC can be up to $1,112, depending on the amount of rent and property taxes you paid and your monthly income. Most people get quite a bit less than that maximum, because the people who are very low income usually are also not paying a lot in rent, because their rent, they're living in like a subsidized unit or a Section 8 property. But some people do get quite a bit more. You file for this either online if you have submitted for the past 2 years, or you can file a paper application with the Colorado Department of Revenue. As I said, the 23 rebate has to be filed by 2025 on December 31, and the 22 has to be filed by the end of this year. If you need copies of those forms, feel free to call our office and we can mail those to you. We have those at this point in time. Now, the payments for this program have nothing to do with filing income tax. So you get paid in a very different way on this program. If you make an application prior to March the 10th, you get 4 payments. So if you were getting $500 or $400 divided by 4, you would get 4 equal payments of $100 a month, or I mean $100 a quarter if you file by March the 10th. If you file by July the 5th, they will make 3 equal payments. If you file by October the 5th, you will get 2 equal payments. And if you file after January 5th of the following year, you get 1 payment. Now, one of the things to know about this is that last year, if you were going to qualify for the senior housing income tax credit, you had to file before April 15th. My assumption is that you will need to file this PTC 104 if you qualify for that, and you qualify for the senior housing income tax credit. You probably will need to file before October 15th of 2025. So you can file for the 23 and the 22 now, but to file for the 24 one, you probably have to file for the 2 together. And we were able last year to get those on one form and not have to file them together. So hopefully they'll continue that, but again, we don't have any confirmation of that. The checks, if you want to know the status of your refund, you can check it online at Revenue Online. And so if you go to the Colorado Department of Revenue and you look under PTC 104, you can see there's a box for Revenue Online and you can check the status of your refund. So the last thing the next thing I want to talk about is the LEAP program, or the Low Energy Income Assistance Program. Again, we want to make sure that people who are either renters who are paying utilities, gas, not electric unless you heat your house with electricity, so it's gas, or property owners who are paying for gas, unless, as I said, you're using electricity as your primary heating source. You have to apply between November 1 and April 30th of 2025. And while this program used to be for really low income individuals, what has happened over the last couple of years is that the income guidelines have gone up significantly. So to apply, you have to be 18 and over, a Colorado resident. You have to be paying utilities to a utility company, or if you are paying gas or electricity as part of your rent for heating, then you just have to provide proof that it's included in your rent. And if your household income is less than this very high, relatively high amount. So as a single person, if your income is less than $3,382 a month, or as a couple, if it's less than $4,400 a month, then you can be eligible for LEAP. And a lot of people do not realize that they are eligible for LEAP because over the last couple of years, they have increased the monthly income amounts a lot. Now, the LEAP payment is handled, again, a little bit differently. So if you are paying utilities and you're paying, say, Xcel or BlackRock or whoever, not BlackRock, Black Hills, then they will just make the payment directly to the utility company. If you are paying utilities as part of your rent, and your landlord is paying it, then basically they're going to put a payment on your EBT or your electronic benefits card. If you don't have a card, then they'll work with you and issue one, or sometimes you can get a check. The average amount ranges from about $250 to $500, but again, it can be more if the cost of utilities is high. The other thing that I usually recommend is that people apply for LEAP sooner than later. And the reason being, because sometimes there is supplemental money left. And if you have paid or applied for it, say in December or November, and they have supplemental money, then sometimes late March, early April, they will make supplemental payments as well. So you might get 2 payments. To apply for LEAP, you can do a paper application, and we can mail you a copy if you would like. The application is either submitted to a central processing center in Colorado Springs or the County Department of Human Services. Some counties process their own, some counties do not. You can also apply at Colorado Peak, and they have simplified that dramatically. So if you tried to apply last year on Peak and you were very frustrated, it's a lot easier this year because they actually have a button. If you scroll down, you can find a button and it says energy on it, and you can click on that. You usually have to provide some level of proof of income, either recent heating bills, rent receipts, property tax payments, evidence of utilities paid. So, there's some requirement, if you will, that you have to show both your income and your utility payments. For people who are really strapped and have a shutoff notice, you should immediately today, if you have a shutoff notice, call this 1-866 number and let them know and get an application submitted as quickly as possible, because they can expedite your application. And then once they expedite it, then that money can be paid to the utility company so that you can avoid a shutoff. The last thing I'm going to talk very briefly about is the Tabor refund. Our Tabor refunds are again eligible to anyone who is 18 or over. We all pay sales tax. We all go to Target and buy candy, or we go to Target and buy underwear or whatever else it is that we buy. So Tabor refunds are a sales tax refund. Sometimes I hear people say, well, I'm not eligible because I don't pay taxes. You pay sales tax. Anytime you buy anything, pretty much you're going to pay sales tax, except for food. It's available to anyone 18 and over, even if you don't have to file taxes because of wages or other taxable income. You get the Tabor refund if you're a filer. If you have to file income tax, then the Tabor refund basically is deducted very much like the senior housing income tax credit. It's deducted from the amount of money that you owe the state for your income tax. If you are a non-filer, then similar to the senior property tax or the senior housing income tax credit, we'll probably have to file the DR-0104 and the CR-104, same form that we filed for the senior housing income tax credit, to claim the Tabor refund. Again, we're going to know more about exactly the forms that we have to file come January 1st. which is again why I suggested earlier, we don't file for this stuff until somewhere after January the 15th, because it gives us the ability to get our ducks sort of all in a row, and also have the conversations that we need to have with the Colorado Department of Revenue to be able to make sure that we're giving accurate information. If you file the PTC 104 and you file before October 15th next year, then you will get the Tabor refund as part of your PTC 104. The amount continues to vary based on current sort of news reports recently. Probably going to be somewhere in the neighborhood of $150 to $200 a person. Again, we don't really have that amount. Might be a little bit more, might be a little bit less. But that number has also not been finalized for the amount that we will get. Now, one of the things that I want to make you all aware of is that we recently received a grant, which we are starting to work on to increase the awareness of older adults about all of these tax credits and tax rebates. And so we are looking for all kinds of opportunities to share that information, whether we are going to be sharing it with individuals through the media, through outreach efforts, through presentations at various kinds of church groups or whatever. We're making a special focus and effort to make the information available to communities of color. So if you have a group that you are involved with, we believe that a lot of people are eligible for this program, or all of these programs, or many of these programs, and simply do not know about them. And so this grant is specifically set up to help us get information out. At the moment, unless we put together a volunteer corps, and if anybody is interested in helping with that, we're certainly open to talking about it. We, at the moment, do not have the staff capacity to actually sit down and help people fill out forms. And so we are still exploring some opportunities for that. Or if there's a group of older adults who would like to take a leadership role as a CGS volunteer and help to get some training for people and help with some of the scheduling and some of those kinds of things, we're certainly open to trying to figure out ways to make that available. And that concludes my remarks related to these particular programs. I will go ahead and send out the PowerPoint probably later today, so that you can review it and have that information available. As I said, this is just kind of a preview. You'll be hearing more about this come 2025 as soon as the rebates and refunds are available. And so I just wanted to give you a little bit of an overview with that about a couple of society programs. We are currently still doing our dental program. We do have funding available for that. We'll have monies available, as probably available at least through most of the first and second quarter of 2025. So if you are less than income with less than 250% of poverty, and you're not on Medicaid or do not have dental insurance, you can apply for the program. We do coordinate with your Medicare Advantage plan if you have one of those and they have a dental benefit. If you live in the Metro Denver area or anywhere west of I-25, you are eligible except for Pueblo and Colorado Springs. We have our telephone buddy program. We're always looking for people who want to have a telephone buddy, also looking for people who would like to be a telephone buddy and call folks. We have some mental health counseling for people in Denver County. We have some money for grants for low vision aids. So if you need like a lamp to a magnifier or a high intensity lamp, we can help with that. We are continuing on our advanced care planning series, and probably in 2025, we'll sort of start over with some of the basics, but have been doing a lot of stuff around getting your home ready for your later years, for, you know, difference between hospice and palliative care, for funeral planning, all of that kind of thing. We are doing our holiday basket program December the 14th, and priority is given to people who are low income and or who will be alone for the holidays. If you would like to be a driver, if you would like to request a basket, you can go to our website at senioranswers.org and you can sign up. Our salute to seniors next year will be August the 23rd at the Greek Events Center in person, and August the 24th virtually. We are concluding in the next 2 weeks here our Medicare Monday outreach. We have a series of in-person events this coming Monday, and then we will do a couple of Zoom meetings after that. You can still request help and support through December the 7th. We also have recently launched a Senior Answers radio program, which airs once a month on Legends Radio, 83.1 on the AM side and 93.5 on the FM side, airs on Sunday mornings and Saturday mornings around 6:30 in the morning. So that brings to a close any of the comments that we have for today. So if you need any help or assistance, feel free to give us a call. And our number is 303-333-3482. And the website is www.senioranswers.org. Thank you for joining us. And now I'll turn my attention to the chat.